The first step in purchasing and investing in cryptocurrencies such as Bitcoin is to select the appropriate cryptocurrency wallet. Many different currencies such as Bitcoin, Dash, Litecoin, Ethereum, and others are stored in digital wallets. However, for the time being, we are learning about Bitcoin, a very popular cryptocurrency. Bitcoin is a digital currency that is kept in Bitcoin wallets or digital wallets. Each sort of Bitcoin wallet has its own set of features, as well as advantages and disadvantages. So to assist you in selecting what form of wallet you need, we'll go over the many types and examples of crypto wallets. But first and foremost, hello, and welcome to the Financial and Investment Wisdom channel. To be alerted of each new upload, please subscribe to the channel and switch on notifications. So what exactly are cryptocurrency wallets? A Bitcoin wallet is a digital wallet that allows you to send and receive Bitcoins. This is similar to having a physical wallet, however, rather than keeping physical money, the wallet saves the cryptographic information needed to access Bitcoin addresses and send transactions. In addition, other cryptocurrencies can be stored in some Bitcoin wallets. In a nutshell, a crypto wallet is a tool for interacting with a blockchain network. Various crypto wallet types can be categorized into three categories: software, hardware, and paper wallets. They are sometimes known as hot or cold wallets, depending on their cooperating mechanics. The bulk of cryptocurrency wallet providers are software-based, making them more comfortable to use than hardware wallets. Hardware wallets, on the other hand, are the most secure option. Last, paper wallets are made of a wallet printed on a piece of paper, although they are now considered outdated and unreliable. Now, how does cryptocurrency work? This means you can share your address with others to receive payments, but your private key should never be shared. Regardless of the wallet you use, the private key provides you access to your Bitcoins. As a result, even if your computer or smartphone is hacked, you may still access your funds on another device if you have a private key. It's important to note that the coins are never wholly removed from the blockchain. Instead, they're simply transferred from one address to another. All users have different needs and objectives and different approaches to investing in and trading cryptocurrencies. As a result, the features and functionalities of Bitcoin wallets vary, and we will look at a few different types of wallets in this video. Hot wallets and cold wallets are the two significant types of Bitcoin wallets. Wallet types: hot wallet versus cold wallet. The only distinction between hot and cold wallets is whether or not they are connected to the internet. Let's look at some examples of wallets. Hot wallet. Hot wallets are wallets that must be linked to the internet to function, and as a result, they are less secure. Because of the internet, digital wallets are extremely accessible, but they are also more subject to security concerns and fraudulent attacks. Hot wallets are more user-friendly, but users' security and privacy are always at stake. Cold wallet. Cold wallets are cryptocurrency wallets designed for cold storage. They store crypto tokens in an offline mode and offer increased security. Because they operate as a vault for everyday transactions, cold wallets are always a safer option than other wallets. There are various sorts of wallets, some of which are connected to the internet and others which are not, and users must select the wallet that best suits their needs. What do the digital keys entail? The terms public keys and private keys refer to two different types of digital keys. These keys are used to swap cryptocurrencies, make purchases, transfer or receive cryptocurrencies, and convert them back into fiat currencies and money. The secret keys that are saved in Bitcoin wallets in online mode are known as private keys. Both of these keys are alphanumeric, and if the Bitcoin wallet's private keys are lost, you will lose all of your Bitcoins. Therefore, it's critical to keep track of your private keys and keep them safe from prying eyes. Bitcoin wallets are more like digital bank accounts that contain users' private keys, and users must utilize security procedures to protect their keys. Some wallets save private keys in an offline mode, while others keep them in an online state. Are you having fun so far? Please give this video a thumbs up if you enjoyed our material, and feel free to express your comments in the comment area below. Before we go on to other sorts of crypto wallets, what additional types of cryptocurrency wallets are there? Generally speaking, there are 5 main types of cryptocurrency wallets, each with its own set of features and security levels to ensure that your Bitcoins and private keys are kept safe. Desktop, paper, hardware, online, and mobile wallets are the 5 basic forms of cryptocurrency wallets. First, let's take a closer look at various types of wallets. First, we have the software wallet. Because they are connected to the internet, most software wallets are classified as hot wallets. Web wallets, desktop wallets, and mobile wallets are the 3 most common types of software wallets. Web wallet. A web browser is used to access web wallets. You don't need to download any special software to your computer or phone because you can access them through a browser. Browser access also means that you can access your crypto from anywhere as long as you have your password in a device with a web browser. However, with a digital wallet, the website frequently owns the key to your Bitcoin. You'll have a little less control over your cryptocurrencies as a result of this. Multi-sig wallets, which have 2 keys, are available on several websites. The website holds one and you hold one. This allows you to have more control over your online money. Because the wallet provider has at least a portion of the keys to your assets, it's critical to do your homework on the site's security. You will effectively be trusting your money to them for safekeeping. Desktop wallet. A desktop wallet necessitates the installation of an application on your computer. Next, you'll create a data file with the application that will store your keys. To get access to the keys, you'll need to create a password. One of the advantages of using a desktop wallet is that you have control over your key. Because you have your key, you must guarantee that your computer is free of viruses and malware. It's also critical not to forget your password. If you choose a desktop wallet, copy the data file and save it somewhere else. You'll be able to access your funds even if you're away from your computer or if it crashes. Mobile wallet. Mobile wallets work similarly to desktop wallets. The key distinction is that the wallet is a smartphone application. A mobile wallet gives you more freedom in terms of where you can exchange money. They also frequently include QR codes, making it easier to acquire and sell cryptocurrency. Mobile wallets provide more freedom, but they also require additional security measures. To keep your cryptocurrency safe, mobile wallets must be virus-free. Furthermore, you must exercise greater vigilance to avoid losing your phone. Then there are hardware wallets. Your keys are stored on a physical device rather than in software with a hardware wallet. The majority of hardware wallets work in the same way that a flash drive does. A USB drive can be used to connect them to a computer or other device. One of the most significant advantages of a hardware wallet is this: it is not connected to the internet, which eliminates a significant security risk. You establish a seed phrase using a hardware wallet to let you access your crypto if you lose your device. Your private key will never leave your device when creating transactions. The gadget requests transaction information and then checks the information. This prevents your private key from leaving the device. Devices like the Ledger hardware wallet support multiple applications and blockchains. This allows you to deal with several types of crypto on a single device. Hardware wallets are more secure than software wallets, although they are more expensive. They're highly suggested for those with a substantial amount of cryptocurrency or who plan to keep their funds for a lengthy time. Finally, there are paper wallets. Basically, it is physically a sheet of paper. A paper wallet is another sort of cold wallet. The document has all the information you'll need to get your cryptocurrency. While cold wallets are generally more secure, the nature of a paper wallet exposes it to risk. If you lose your paper wallet, you'll also lose your money. Another drawback of a paper wallet is the inability to send partial amounts of money. Workarounds exist, but they can be time-consuming. Paper wallets are often avoided due to these drawbacks. That concludes today's video. Don't forget to subscribe and switch on notifications to be notified of new videos. This is Financial and Investment Wisdom, and we'll see you in our next video.